Is ARM Holdings really a tech titan flexing its muscles right now? Or is it more like it's just waving hello with a price tag that could, well, make even a tech billionaire blush? It feels like a classic battle, momentum versus mathematics. And we're here to try and break that down for you. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're taking a deep dive into the chip designer that's become, well, increasingly critical to this whole AI revolution. ARM Holdings, ticker ARM. And just so you know, our analysis is based on our research with data captured earlier today, September 11, 2025, around 08:50 a.m. ET. Okay, so first, let's maybe set the scene a bit. The broader market this morning, pre-market futures are ticking up, but just ever so slightly. Suggests maybe a cautious open, still modestly optimistic, I guess, but not exactly a roaring start.
Right, cautious is the word. And the real wrinkle here, I think, is that this little bit of optimism. It feels like it's built on some pretty shaky ground. The bigger economic picture is actually darkening a bit. Economists are flagging a high risk of recession, especially after we saw those first job losses since way back in 2020. Plus, everyone's kind of holding their breath for that big inflation report, the CPI, that's due out later today.
Yeah.
That could really swing things.
Yeah, that CPI number looms large. Okay, let's step away from the macro view and really zoom in on ARM itself. What's driving the story there? Because, the company seems to be on an absolute tear lately. Just yesterday, they unveiled their new Lumex chip portfolio that's aimed squarely at boosting AI in smartphones, right?
Exactly. And on top of that, they've just hired a former top AI chip director, straight from Amazon. Big news.
And the market reaction was immediate, wasn't it? Stock soared nearly 9% in the last session alone.
It did. And, Wall Street seems largely on board with the story, at least for now. We looked at 39 analysts covering the stock, and over 56% rated either buy or strong buy. But here's the conflict, the big question mark. Our own fair value analysis looking at the fundamentals suggests the stock might really be worth somewhere around 16.50 cents.
Wow, $16.50.
Yeah. Compare that to where it's trading now, near $140. The models are just screaming profound overvaluation. It's a huge gap.
That's $16.50 versus $140. That's an absolutely massive difference. How does Wall Street justify that? Are they just betting purely on future AI dream earnings, or is momentum just completely overriding the math right now?
I think that's precisely it. You've hit the core insight here. We're seeing this powerful split in the market. Well, yeah, traditional fundamentals definitely scream caution. The sheer force of these immediate AI catalysts like the Lumex chips seems to be creating this feedback loop. Momentum, especially short-term, it's overpowering the traditional valuation metrics. It feels like the market has this intense hunger for any legitimate AI story right now, almost regardless of the price tag, at least for the moment.
Okay, so the story is powerful. What about sentiment? How are investors actually feeling, positioning themselves? Is it all bullish?
Well, looking at the options market, the fast money crowd seems overwhelmingly bullish. The put-to-call ratio is really low, 0.38, which basically means, for every bet on the stock falling, there are almost 3 bets on it rising. That sounds like strong speculative confidence. It is. And what's really interesting, kind of connecting the dots here, is that the $145 strike price has become this magnetic level. It's attracting the most interest for both the bullish calls and the bearish puts. So that $145 mark clearly shaping up to be a key battleground level. But on the other hand, you've got this significant pocket of dissent. Short interest is sitting at over 11% of the float.
11%? Wow.
Yeah, that's a notable chunk of investors actively betting on a decline. So it really feels like, a high-stakes game where some are all in on the future story and others are convinced the price just can't hold.
Okay, so we've got the shaky macro backdrop. Fundamentally looks way overvalued. Sentiment is split. I'm really curious now about the pure price action. Do the technicals offer any clarity here amidst all this noise?
It's actually quite striking how clear the chart picture is, technically speaking. It's very one-sided right now, both the short-term and long-term trends, decisively upward. The stock has broken cleanly above key moving averages. That's usually a sign of strength. And this recent price explosion, it happened on an exceptionally high trading volume. That suggests strong conviction, strong money flow into the stock. Momentum measures are showing a really sharp upward thrust, accelerating strength, and volatility after a period of consolidation has expanded. That often suggests the potential for bigger, faster price swings ahead.
Right. So you have this incredibly bullish technical picture staring right in the face of what looks like, frankly, a wildly overvalued stock fundamentally, plus that darkening economic forecast. Is the market just being irrational here? Or is this AI momentum thing just different this time, something traditional analysis is missing? How do you weave all this together into a strategic outlook?
Yeah, putting it all together, our verdict lands on a cautiously bullish outlook. The primary risks are pretty clear, right? That extreme overvaluation is number one.
Yeah.
Then there's the weak economic backdrop, that looming CPI report, and that significant short interest betting against it. It does remind me a little bit of past bubbles where the narrative just takes over for a while. The question is always, how long can that momentum defy gravity?
But the bullish tilt, for us anyway, comes down to the short-term technicals. They're just too powerful to ignore right now. That breakout on that heavy volume, fueled by a legitimate AI catalyst, it just suggests the path of least resistance, maybe for the next few trading sessions, is probably higher. So we're leaning into that immediate momentum despite those headwinds.
Makes sense. So for the coming week, keep an eye on that key battleground, $145. If the bulls can hold the line above $145, then the next likely upside target looks like $154. If the sellers win out at $145, though, expect a pullback maybe into the low 140s. And our invalidation level, the point where we'd say this bullish short-term thesis is broken, that would be a close below $142.80.
Okay, so with ARM, it sounds like you have a stock that's technically a sprinter, but fundamentally maybe a marathon runner who forgot their running shoes at home. Trade the momentum, perhaps, but definitely don't forget to keep checking that price tag. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.